Nick, welcome back to the show. Good morning.
All right, how's it going, Frank?
It's going pretty, not as good as you, man. Stock's trading at an all-time high. You had a strong quarter. I want to ask you, what was the driver of this quarter? Your tool segment was the best performer, but exactly what led to that boost when it came to tool sales?
You know, I think this. Look, I'd like to say charismatic leadership, but I don't think that's it. You know, I think this is it. If you're looking at, we pretty much had across the board tepid. What differentiated this quarter? We've had a lot of high quarters. You know, over the last 10 to 15 years, almost every quarter has been a relative high. You know, for the first, second, or third quarter. But this one was different in that the sales were all down slightly. You know, attenuated by the uncertainty and geopolitical turbulences and uncertainty in the U.S. market. But the difference here was across the board, profitability was up. You know, we had over 100 basis points gross margin improvements in every division, in every group, and the overall corporation was up 130 basis points. And we spent more SG&A because we believe that the future is going to get a lot better. So I think the big thing was about this quarter, I think, which got everybody's attention is profitability improvement, record profitability against the wind. And so we proved that Snap-on. We've always said that Snap-on can make more money even if we don't have scale, and this one proved it. Now, what drove it, I think, is a couple of things.
Wait, Nick, I want to get into one other metric. Let's talk about margin. Margin is actually a big story. A lot of people looking at valuations and margin nowadays with the markets, a lot of people think kind of frothy. So how were you able to expand margins? I mean, some of it was material cost, according to your earnings report. But what's this higher margin business? What is this higher margin business that you were able to capture?
There's two things going on. If you want to look at it in a macro sense, you know, people look at us as a tool company, and you said hand tools. Hand tools are really profitable. We make the best, and everybody knows it. But the other thing about vehicle repair today is software is becoming more and more important. Software for running the garages efficiently. Software for finding the right part efficiently, electronic parts catalogs. And most of all, software for helping diagnose and repair the business. You see, the thing is how it is now is there's so many electronic trouble codes on a car now. You can read those codes, but it's not definitive. So then the standard way to diagnose the car is to go through a decision tree. It takes a lot of time. Well, we have databases that are, some of them are almost 3 billion repair records, and some of them over 400 billion data points in repair. And so what you do is say, here's what the car is saying, here's the type of car it is, here's how much mileage it is, and you put it in our database, and it'll give you a Pareto diagram saying it's most likely this, and that business was up, one. And then two is, we're a business that calls on mechanics and calls on customers in critical industries up close and personal, and we see what the work is, and we translate that into particular products that solve small problems, and people are willing to pay for those. And so we introduced quite a few of those. That drove the margin.
All right, so Nick, one thing, you mentioned all the mechanics and different technicians that you check on. You previously told us they have a lot of cash, but their sentiment is low. Is that changing at all as we go into this Fed cycle?
No, it's the same. It's the same. That's the point. Without a change, we made more money. And the thing is this. I
want to ask you about something else. I know you make most of your products here in the U.S. Tariffs. That's a big issue when it comes to this election. Will those tariffs impact your business domestically at all? And will it impact some of your foreign business?
Look, tariffs, I mean, who knows what the tariffs, I mean, if you listen to people talking about it, we're going to tariff everybody 20%, we're going to tariff China. You have no idea. Who's ever elected, you know, if you look at what's coming out of the election, this is what technicians say, is people are saying, oh, we're going to not tax, we're not going to tax, you know, overtime. We're going to control prices. We're going to tariff everybody. It's like the Mad Hatter's Tea Party. So nobody knows what the shape of the actual thing is going to be. But in tariffs, the last time we managed them, because we make in the markets where we sell. We make 80% of what we sell in the 80% of what we sell in the United States. We make here. We're expanding those factories because we believe in the American worker. A lot of people say the American worker is the question. We say it's the answer.
All right, Nick, we got to leave it there.